Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Cheryl Massar and Tim Stenovec from Bloomberg Radio.
Earnings season, folks, officially underway. Three of the big ones already reporting: JPMorgan Chase, Citigroup, and Wells Fargo. They were out this morning before the open. A bit of a mixed bag on what some would say maybe is a bit of a tough backdrop. I'm looking at the stocks. Citi is down 2%, Tim, as we speak. JPMorgan just a little bit lower, down about 1% or just shy. But Wells Fargo really taking the hit, the biggest on a percentage basis, down about 6%.
Yeah, three of my decliners that you just mentioned just now, certainly. Hey, all three sold off earlier in the session. You just heard from Carol, the latest, and Charlie when it came to those numbers. With our bank earnings roundup, with us is Bloomberg News Global Finance Correspondent Sonali Basak. She's here in our Bloomberg studio. Also, Cheryl Pate, Senior Portfolio Manager at Angel Oak Capital, joins us as well. Cheryl joins us from Atlanta. Okay, Sonali, the good, the bad, the mixed, the results from the three. Give us the highlights.
Wow. So the good news is that you did see a tick upward, for example, in investment banking fees at a lot of places. JPMorgan, that was 50% higher. The bad news is that, for example, at Wells Fargo, you saw weakness compared to what was expected in net interest income.
We knew that was coming, though.
Yes, but the thing here is you did see, interestingly, yesterday, for example, when the CPI print was released and you saw that sharp move lower in yields, you actually saw the biggest U.S. banks sell off and the regional banks rally. And the reason you saw that was because even though you're seeing rates potentially come down, I think there's a massive question on what does this mean for that mix that banks have. What happens to the deposits, but also what happens to the money that's being made from the loans that are being put out. Remember, we're looking at consumers with tons of credit card debt right now. You're seeing charge-offs starting to rise. Provisions for loan losses were higher than expected at JPMorgan, Fortress JPMorgan. It's not that people are really worried about, the health of JPMorgan. What they're more worried about is, okay, well, what does this say about the propensity of consumers to both take on more debt and pay that debt back?
Right, exactly. So is it mixed, do you say, in general, or is there any trend overall takeaway?
Well, think about it. All the big stocks are lower today after earnings, and not by a really small margin. They had a really significant run-out into this moment. You've seen JPMorgan, Wells both up more than 20%, Citigroup almost 30%. Citigroup still trading at around 66 or so percent of book value, maybe a little less right now. But, the setup was pretty good going into this. The future is super uncertain.
Yeah, that's fair. I think that is so fair. Let's get to Cheryl. Cheryl, come on in on the conversation, listening to Sonali, who is usually up, at the wee hours and breaking it down and sending us all messages about the results. What's your takeaway about the three big banks that reported today?
Yeah, no, I think it's a similar perspective here. I really think a lot of the reaction today really hinges on the forward guidance. And I think, there may have been some expectations that there may have been some upside to some of the guidance. The fact that JPMorgan reiterated, I think, was a little disappointing. And then, Wells on the other side guiding to the high end in terms of NIM compression or NII compression certainly was disappointing. So we've been focused on guidance, on NIM, and on credit. And I think that the question mark really is on the forward guidance, and we didn't get a lot there.
Sonali, Jamie Dimon, we always listen when he speaks, whether it's a letter to investors, an annual report, or an earnings call. Commentary from Jamie Dimon. Anything of note?
He wasn't there today. He was out celebrating the bank's 100th anniversary in Germany. He was in Frankfurt.
Is that notable?
It's interesting. When Jamie Dimon sneezes, everybody catches a cold, right?
Is that what happened to me? Is that why my voice
If he doesn't sound like Tim Stenovec, a deeper Tim Stenovec, it is Tim Stenovec.
People want to look for a deeper meaning. You look at Morgan Stanley, for example, and just kind of how sluggish the stock has been relative to the other banks. Given that there has been a big change in leadership there, so much confidence in James Gorman, people are looking for direction from Ted Pick and who he is as a leader.
Yeah.
And if Jamie Dimon were to step down, then the same questions arise for JPMorgan, perhaps on a bigger scale. Mm-hmm. So people do look for direction, but perhaps like many leaders are doing right now, giving deputies time to breathe and make their mark is prudent coming into the next cycle.
So, Sonali, is that another sign that you know where I'm going with this?
You can't read into things, though. That's the thing.
We can't read into this?
I don't think so. He steps down when he steps down.
He does, but he's also made some moves in the past few months about potential successors, and
but
also
I've got to say,
talked for
can I
the
tell you
first
something?
time.
For 10 years, man, this guy has been making moves.
Didn't he say something different a few months ago?
He said that, that 5 years thing that he always said, that has gone away. It's the horizon is certainly smaller.
Okay.
The bigger question for me is, are his deputies ready? Is Jen Pipsack ready? She's the one that people are watching the most.
Some would say he's being, maybe really responsible as a leader to make sure that bench is ready to take over. I want to bring Cheryl back in. You're hearing us talk about Jamie Dimon, and we know there's more than JPMorgan, but we do focus on it. What is your thinking about the outlook for this company, and then kind of who takes over and when they take over from Jamie Dimon?
Yeah, I think that's been a question for a number of years, clearly, as some of the commentary already. Look, I think this was a good opportunity to have some more people in the forefront, and I think it was done well on the conference call today. Timing, I think, is still uncertain, and perhaps maybe it's dependent on where we go from an economic perspective here too. The data now is somewhat supportive of moving towards rate cuts and hopefully a soft landing, no landing type scenario, which may be more opportune than a more hard landing scenario.
Cheryl, I want to shift gears to Citi a little bit. Citi's down 2%. It's off its lows of the day, down 3.6% at its lows today. Citi warning that costs likely to be at the high end of the forecast. What was your takeaway on Citi? What do we need to know about Jane Fraser and her team and what they're doing? And as Sonali mentioned, this is another one up 25% so far this year.
Yeah, no, I think the execution so far has been good on the restructuring plan, and we are positive on the name for that reason. I think this loops into the forward guidance, and expenses have been troublesome for the whole sector for some time, and moving to the higher end of the range again here, I think puts more uncertainty onto the forward look. I think more of what will drive Citi looking forward, though, is going to be execution on restructuring and also working to deploy some of that excess capital. And I thought the buyback commentary was helpful from that perspective today.
Cheryl, what is your favorite choice among the banks and why?
I think today we would say JPMorgan would be our top pick. We do like the large cap banks generally, given more diversification. We clearly saw that come through in the capital markets revenue. And I think, JPMorgan was the standout winner there today. But also in case of looking towards any wobbles in credit going forward, the prudence, the fortress balance sheet concept, I think really stands the test of time in a more difficult environment. So that's, where we would put our top pick today.
Hey, just to wrap up, guys, just got about 60 seconds. Cheryl, let me start with you, and then we'll go to Sonali. Next week, Goldman Sachs, Bank of America. What is on your radar, Cheryl?
I think we're mostly watching for credit, particularly from Bank of America, and then starting to get in some of the regional banks. We've clearly been concerned about commercial real estate exposure, but also some weakening in the consumer side. I think we were encouraged today with the comments from JPMorgan on credit card and also Citi that it's just regular sort of normal course normalization, seasoning of vintages. But I think that'll be important to see out of Bank of America. And then, the Goldmans and Morgans of the world. Clearly, it's been a good quarter for capital markets, particularly strong investment banking revenues and equity trading.
Sonali, very briefly, next week, Bank of America. What are you looking for?
In addition to what Cheryl was saying about credit quality, I'm also watching for trading because if you saw fixed income coming in a little light at JPMorgan and even Citigroup, that's a big business for Goldman Sachs. They have been leaning in on prime brokerage. And of course, Morgan Stanley equities trading as well was a huge bright spot this quarter so far. Let's see how that competition plays out.
All right, great setup of what's going on today and then, of course, into next week. Sonali, Basak, thank you so much. As always, we always appreciate your input and the research you send us.
Pre-5 a.m. arrival this morning.
This kid doesn't sleep. Yeah. Global finance correspondent, Bloomberg News, and Cheryl Pate, our thanks to you as well in the analysis. Senior portfolio manager at Angel Oak Capital Advisors there in Atlanta. The KBW Bank Index, little change, and actually most of the names are higher in today's session. Okay, so now to our other big focus this week, and that was two prints on inflation. Fed Chair Jay Powell updating U.S. lawmakers on the economy and monetary policy. And then how it all played out in moves along the Treasury curve. Carol, safe to say, a reset on rates again, which makes us wonder, have we topped out? Yeah, it's a great question, and we've got a great person to answer it. Back with us is Bloomberg News rates reporter Michael Mackenzie. He's out there in New Jersey. All right, Michael, another inflation print today. We had one yesterday. We definitely did see the Treasury curve move. How are you kind of adding it all together? Have we topped out when it comes to some of the levels that we've seen on the Treasury curve?
I think that's a pretty reasonable conclusion to draw, Carol. I think some of the rally you're now seeing this week has actually, one investor described to me as a bit of FOMO. People who missed the top in yield back in April when we were around 475, for example, in 5 years are now having to buy because the data is slowing and the inflation print we got yesterday on CPI was really important because there was a bit of anxiety going into that. But the fact that it came below expectations, the fact that it shows that the Fed has probably done enough here in terms of tightening interest rate policy since 2022, that they are going to win the fight on inflation and they are going to get it closer towards that 2% target. And I think you're now going to get the market beginning. We've seen some big trades go through Fed funds futures today where people are beginning to speculate on whether the Fed will go 50 in September. I think that's not on the table at all at the moment. But it is interesting to see when you look at rate cut expectations for 2025, they're beginning to build again. There's this expectation in the bond market that the Fed's going to do a lot more easing than people think, or at least what the Fed says they're going to do by next year. So I think there is a bit of FOMO going on. Retail sales next Tuesday will be an important piece of data. And I think really it'll be the next couple of payroll numbers that we get, because if the labor market softens further, then I think you definitely get the cut in September. You might even get another one in November. Michael,
we often ask you about a peak on the 10-year, but how low could the 10-year go this year? What are the traders you speak to?
There's chatter today that you're going to see a 3 handle on the 10-year. I think.
Wait, you said 3 handle? You said a 3 handle.
Yeah, this year. Get below 4%. I think, again, we're in this tricky period now where the inflation number was such a good number for the bond market. You just cannot really assess just how big this buying is going to come in to drive prices down. I'm actually drive prices up and yields down, sorry. So, and we have been here before. We've had these big pivot trades that have been put on the last couple of years. But the CPI was also, it came after 2 days of testimony from Chair Powell. Right. And he kind of brought back the dual mandate for the Fed here. He said, we're watching employment. And I think if you get cracks in labor over the next couple of months, you're definitely going to see the bond market rally harder.
So I am thinking, we all are thinking about Monday at 12:30 p.m. Wall Street time, when Fed Chair Jay Powell will be interviewed by David Rubenstein at the Economic Club of Washington, D.C. Powell asked for this conversation. Is this kind of a victory speech? A little bit, or I don't know. How are you?
I don't think he's going to play it that way. I think he's going to continue to be pretty careful. The one speech you really got to look forward to, I think, is the end of August at Jackson Hole, because that'll be about 20 days before the September 18th Fed meeting, and that's going to be the pivotal one, because then he'll have seen more data. Don't forget, they're very data dependent. They keep telling us they're data dependent. I think Monday he'll stick to the script, the recent script. They're looking at both the labor market, they're looking at inflation. He's probably has more confidence that inflation's coming down. Don't forget, this week he said they didn't have enough confidence. So there may be he could get the market fired up again if he says we do have confidence. But I think he's going to be pretty cautious still. But I think that Jackson Hole speech he makes at the end of August, that's going to be the big thing, the big event for the market. Michael,
just 30 seconds. What about the July 31st Federal Reserve meeting? Is there any chatter of a rate cut there?
No.
Why not?
I think you just haven't seen enough data. I think the Fed has made it pretty clear they want to see a series of data prints. The inflation is moving in the right direction. Labor market, okay, unemployment rates ticked up over 4%. That's not enough to get the Fed to really think about, bringing rate cuts forward. They want to give themselves, plenty of flexibility still. But everyone I've spoken to this week, even people who didn't think September was in play before now say it's in play, and they expect a cut in September based on what we're currently seeing in the data.
What an amazing week. Again. Michael Mackenzie, have a great weekend. Bloomberg News rates reporter Michael Mackenzie out there in New Jersey.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, folks, Tesla, always on our radar, it feels like. Shares of Tesla did sell off earlier today. I think I'm just going to take
they've turned around. They're up 3.8% now.
Yeah, we've definitely seen like a rally. I feel
Round
like
trip,
the whole
right?
market, right? A little bit. Yesterday, we did see the trade, though. There was some pressure. The stock today was downgraded by UBS on concerns that the U.S. electric car maker shares have risen too much too soon, that's their words, on optimism over its artificial intelligence plans. In the meantime, Tim, we've got another story on our radar when it comes to Tesla, or should I say the anti-Tesla crowd.
Yeah, the other EV startup that's persuading buyers to drop $70,000 on its EVs, but still has a big hurdle to get over, and that is making money. The story is in the upcoming issue of Bloomberg Businessweek. It's coming out next week. It's the August issue. We've got with us Bloomberg Technology co-host Ed Ludlow. He joins us on his Businessweek story in our San Francisco bureau. Ed, you know a lot about Tesla. You know a lot about Rivian. This is the focus of the story that you wrote with Max Chafkin. How is the company doing?
It's hard to say, and we wrote 4,000 words, so you'd think we'd come to a conclusion.
It's a great story.
So thank you guys. Where have you two been? All over the place, West Coast, East Coast again. Look, you guys kind of teed it up really well.
Riding in a lot of EVs we have been, I will
exactly,
say that. Different types.
And I'm really grateful for you guys getting hands-on with that world. Like, the point or the open of the 4,000-word Businessweek article is that Rivian, or the first iteration of it, was like the anti-Elon, anti-Tesla. Tesla had small form factor cars, Model 3, Model Y. They have Elon, and we, Elon is divisive. I think that's a fair and objective thing to say, frankly. And so in the first instance, Rivian was able to sell its kind of very large SUV and very large pickup to that kind of market, somebody that didn't want a Tesla but wanted an EV, or just didn't like to be associated with Elon's products, but it had a super limited shelf life. Now they've hit reset. They are on Rivian 2.0, and we went super detailed on the strategy to actually stop burning through billions of dollars and start making some money down the road.
Okay, Ed, I have a sort of a how the sausage is made question for you, because I imagine while you were reporting this story, news of that $5 billion investment from VW came in.
So without betraying confidence, it's brilliant timing. It gives the story new life and energy. Like, the way that I would put it is that Volkswagen almost comes in at the 11th hour. And because an injection of $5 billion certainly helps. Even if the story is that you're burning through billions anyway, having some more billions is good. But Max and I certainly got the sense a few weeks ago that something was happening. And I've got a pretty good track record, right? I've broken quite a lot of news on Rivian, frankly. And I just had no idea. I didn't see it coming. We did learn the backstory, which is that Oliver Bloom and Volkswagen were admirers of Rivian. RJ Scaringe, the CEO of Rivian, met with Oliver Bloom about less than a year ago, but like last summer in Atlanta, Georgia, where Porsche has its kind of excellence center. It's somewhere you can visit. And he rocks up, and in the parking lot, they've got some Rivians. And he's like, that's kind of neat. But the idea is like all car companies benchmark against each other by testing other people's vehicles. And they kind of went from there. And the main thing you need to know is that Rivian needed money, and it has some access to that now. But it's also kind of a big vote of credibility for Rivian, that Volkswagen would turn to them to fix some of Volkswagen's own problems in this kind of shift we're seeing to electric drivetrain.
And yet, Rivian, if you go back to late 2021, was a $172 a share stock. It is down more than 20% this year. I said it used to be $172 a share. It's $18.52 a share today. So if it seems like it has so much potential, how come investors aren't really necessarily, buying up shares?
Yeah, the concern has been, does it ever move beyond being a niche player? It built 52,000 EVs across its 2 consumer cars and a van for Amazon last year. It will probably do 57,000 this year. How does it get to the 400,000 that Tesla does each quarter? And at one point, its market cap was lower than the cash it had on its balance sheet. And one way of interpreting that is that the market values the car business at basically zero. And so cue the R2. The R2 is a smaller form factor SUV. They have a new plan on how they're going to build it. It's going to go from their existing plant in Illinois instead of Georgia, where they still plan to build a factory in the future. That's going to be, they hope, the Model 3 moment, like Tesla went through. Finally, a mass market car. And the question that we pose, or at least Brad Stone says now that we want to answer questions in Businessweek, I think we explain how the R2 is going to get Rivian there based on interviews with RJ Scaringe, the CEO. And it's not going to be easy, but they have really thought about it.
Can we think about it, the R2 being like the Model 3 for Tesla?
Yeah. So in scale.
Yeah.
But I think go back to what we started the conversation on. The initial buyers were the early adopters, the people that didn't want a Model 3, so they wanted an SUV. And Rivian had the only 3-row SUV on the market. But most people just want the RAV4, Toyota RAV4 or Honda CR-V equivalent. And it doesn't really exist yet. The problem Rivian's got is that they've said, here, we have it. It's $45,000, the R2. Them and everyone else. Everyone's going to have this little SUV in the $35,000 to $45,000 range coming in the next 2 years. So it's about kudos to Rivian for also being quite good at technology. The products are really good. They've just not been very good at building them. They're a startup, right? That's grown super fast. And time to grow up, get rid of the teething problems.
But that, you just hit on it, right? That's the holy grail, though. Whether you're Tesla, whether you're Rivian, it's not about spending $70,000 or $80,000 for an EV. If you're really going to build out your business, you've got to get to that middle market, right? Or less expensive market. That's where you scale up.
Yeah, and I think that the reason I really enjoyed the process is I covered Rivian starting when it was 40 people or whatever, and now it's 13,000. And we kind of really get into the head of CEO, RJ Scaringe, and he was generous with his time in terms of interviews and of course spoke to a lot of sources, but I think the penny dropped for him that he needed this R2 to materialize more quickly. And that's why they're going to build it at their existing factory in Illinois, not Georgia, because they can do it 6 months faster than they had originally planned, knowing that all that competition is going to do something at the same time.
Ed, very briefly, because there's a lot we want to get to in the last 3 minutes with you. Last question on this. One of my big takeaways was RJ Scaringe really finds himself in the right place at the right time, whether it's MIT or whether it's with Lauren Sanchez.
Oh, sure.
Tell us about that.
So in short, RJ is an incredibly impressive person. He is kind. He is held in high regard by everyone that I've spoken to, takes incredible care of himself physically. He's a micromanager from an engineering standpoint. The question is it's hard being a startup CEO, founder CEO. He's been also brilliant at deal making. And so I also kind of explain in the magazine, he's been an unreliable boyfriend. The deals with Ford and Mercedes to do joint ventures and joint EVs, what happened to those? And so now with VW, he gave me a pretty strong response when I put that to him about why VW is going to work. And the answer basically was we've proved that we're good at this. We'll see. Yeah.
All right. So listen, great story, killer story in the upcoming new issue of Bloomberg Businessweek. So we highly recommend everybody check it out. That new issue should be out next week. Having said that, we also want to get to an exclusive from you and Dana Hall yesterday about Tesla postponing its robotaxi unveiling to October.
Okay. Ed, when Ed joined us to talk about this a few months ago, we said, Ed, is this really going to happen in August? Because next year, autonomous has been the big joke for about 8 or 9 years when it comes to a decade at this point to Tesla. So it surprised the market. We saw shares close down by more than 8%. Was it a surprise to you?
Well, it wasn't a surprise to me because, like, it's our job, right? In the course of our reporting, we spoke to sources and they said, yeah, it's delayed to October. The reason, according to the sources, is that I think Tesla and Elon wanted more to show. They wanted more prototypes to actually unveil when the event happens. One source told me that even as recently as this week, Elon requested that the design team make changes to the design of the robotaxi. So as we always say, Elon's often late on the timelines or deadlines he publicly states, but he also often gets there at the end. And I think the anxiety in the share price was it had been on an 11-day winning run. RSI for the technos or technicals out there was like in the high 80s. And so much emphasis has been put on this pivot, that Tesla in the long term, making EVs and selling them to consumers will be a small part of the business relative to software sales or running on autonomous robotaxi business.
Yeah, fascinating. I'm looking at RSI too, Relative Strength Index, and it's still pretty much overbought at this point. So you're right, it has had quite a run as of late. Ed, so great to go around the world when it comes to EVs with you. So appreciate it. Have a great weekend. Our Ed Ludlow, he is co-host of Bloomberg Technology on Bloomberg Television. Catch them every day at 11 a.m. Wall Street time on Bloomberg TV.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, last night's press conference, President Joe Biden said European allies are prepared to cut investment to China if it keeps up its support for Russia, offering a warning after NATO accused Beijing of enabling the invasion of Ukraine.
That's right, Tim. He also reiterated that the United States is very committed to NATO, basically, bottom line. Earlier on Bloomberg Surveillance, NATO Secretary General Stoltenberg stressed, too, the ties between the U.S. and its European allies.
The United States will remain a strong NATO ally because this also makes the United States safer and stronger. The United States is big, 25% of the world's GDP, but together with NATO allies, we are 50% of the world's GDP.
Okay, that, of course, is NATO Secretary General Stoltenberg earlier on Bloomberg Surveillance. I do want to point out, too, there's a new story on the Bloomberg that says whether it's Joe Biden or Donald Trump, Europe knows it must stand alone. So we want to get more on NATO, the role of the U.S., how the questions around President Biden's presidential run are, Tim, impacting it all.
We welcome back Angela Stent, senior fellow at Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. Dr. Stent, also senior advisor to the Center for Eurasian, Russian, and East European Studies and professor emerita of Government and Foreign Service at Georgetown. Early in her career, Carol, she was a national intelligence officer for Russia and Eurasia at the National Intelligence Council and also served in the Office of Policy Planning at the U.S. Department of State. We're done with the interview. We ran out of time.
Angela, you're always so impressive. Thank you for coming back. What's top of mind? NATO, U.S., Europe, Russia, and President Biden's political future. Where should we start?
Well, we can start, with the NATO summit, which from the point of view of the Ukraine-Russia war was as expected, was successful, presented unity, continued support for Ukraine, said that there would be a bridge to NATO membership, although it's not clear what that bridge is. We're setting up a new NATO command in Germany, in Wiesbaden, to support Ukraine. 700 people there. NATO's sending a civilian officer to permanently be stationed in Kiev to advise the Ukrainian government on different things. So there was a lot that was signed, that was promised, that was to Ukraine. A Ukrainian president was there. But as you intimated, hanging over this NATO summit for the allies was the question of, after January of 2025, will the United States still be committed to NATO? And we know that some of these NATO leaders that were in town for the summit were also meeting with some of President Trump's foreign policy advisors to try and get a sense of the lay of the land. But there's a lot of uncertainty. And now some of these Europeans are saying we have to conceive of a world where Europe is without the United States as it contemplates its own security.
Well, Angela, to that point, just this is an anecdote, but on the subway this morning, I opened the New York Times app, as I always do, and I saw in the app that there were, I believe, 7 or 8 stories about the press conference last night and about what Democrats are thinking when it comes to Biden's reelection chances. Not one of those stories was actually about the substance of what happened at the NATO confab. And I think, and my question for you is, this is not a knock on the New York Times. No question, this is what people are interested in and what this is dominating the conversation in Washington and abroad as well. My question for you, Angela, is what does it mean for the international community if this is the focus right now and we're not focused on the NATO confab?
Yeah, I mean, there was precious little in the news about the NATO conference, which was 75th anniversary, lots of preparations, supposed to show the strongest alliance in the history of the world, but it was so overshadowed by President Biden, his state of health, and the future of democracy in the United States, which is a shame. Because this was an important summit. As you said, it's the first time that NATO explicitly criticized China for its support of Russia in this war. The Chinese were not happy about that. There was a meeting with Asian allies, Japan, South Korea, Australia, New Zealand, and NATO and the Asian allies are now cooperating more because obviously the Ukraine war and also the challenge from China, they're very much interconnected. All of those things were really overshadowed by this question of what's happening domestically in the U.S. And, I did watch the president's press conference yesterday, and on the substance of what he said about foreign policy, particularly Russia, Ukraine, but also China, the Middle East, that was all very coherent and good. But as you say, people are focusing on the style and his attitude towards everything instead of focusing on the subject.
So our story on the Bloomberg at 2:27 p.m. Wall Street time here is whether it's Joe Biden or Donald Trump, Europe knows it must stand alone. Is that how you see it, no matter who is in the White House come November, that is it increasingly a Europe on its own versus really working with the United States?
I think that's a little over-dramatized. I mean, I think if a Democrat wins the presidential election, there will be continuity. I think there will be more pressure on the Europeans to spend more on defense. But in a way, the Biden administration has been successful in persuading many of them to do that. And so many of these countries are now spending more on their own defense than they were before. But obviously, if you think about NATO, the U.S. is the biggest contributor to it. If President Trump wins the election, then I think there are very serious questions about what will happen to Europe and the U.S.-European relationship. We know that he seriously contemplated pulling the United States out of NATO when he was president. And even though the Congress has passed legislation trying to make that impossible, if that's what he wanted to do, he would probably do it. Now, there are some of his foreign policy advisors. I mean, there are different people. We don't know who would get what positions, but some of them, I think, and Senator Vance, for instance, I don't know whether he'll be the vice presidential candidate or not, or what position he might get. He's been explicit that we should stop giving money to Ukraine. Right. We should make the Europeans do much more for their own defense. So I think to say that Europe's going to be on its own definitely after January 2025 is overly dramatic. But I think there's certainly a grounds for concerns in Europe that are quite well founded.
Angela, we have about 2 minutes left. I have two quick questions I want to get to with you. First up, the relationships that we are increasingly seeing between Russia and India, Russia and China. There's a lot of jockeying that seems to be going on. Are you still worried about Russia and Vladimir Putin and his kind of longer term intentions?
Oh, I certainly am. I mean, I think we in the West thought they would try and isolate him after this war broke out. And of course, he's less isolated now than he was when the war broke out, and even arguably before it. So you can see a country like India feels it's very important to maintain that relationship with Russia, irrespective of the war and irrespective of the fact that U.S.-Indian relations have been improving. And to go to Russia just before the NATO summit began and on the day when Russia bombed this children's cancer hospital in Kiev. Not that Prime Minister Modi would have known that before he went. It's still, it says something about how Russia has managed to utilize this war to its own benefit.
Angela, 40 seconds left here. Why should U.S. voters care about NATO and U.S. involvement?
Because if Russia succeeds in Ukraine, and if Russia then sets its sights on some other country, we should remember that twice in the 20th century, the U.S. was forced to support Europe in a war, because in the end, it does threaten U.S. security if Russia makes huge strides on the European continent. It does affect us. We can't separate ourselves from that continent.
So appreciate it, you finding time for us on this Friday, and as you always seem to do. Angela, thank you so much. Have a great, great weekend.
Dr. Angela Stent, Senior Fellow at Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. Dr. Stent, also a Senior Advisor to the Center for Eurasian, Russian, and East European Studies. She was a National Intelligence Officer for Russia and Eurasia at the National Intelligence Council, and also served in the Office of Policy Planning at the U.S. Department of State.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Oh, in our next lifetime, we're going to do Bloomberg Businessweek
After Dark.
After Dark, and that conversation we just had about drinking water before you go to bed. Don't do it.
No, just stop
I'm just going to leave it there. Having said that, more importantly, what our Bloomberg audience really cares about.
Not that.
Tim's like, please, Massar,
to say
stop while you're ahead. We've got a rally underway, but we're rolling over in terms of our best levels. So we're not seeing 1% gains anymore on the S&P and the NASDAQ, but still up about 0.8%.
18% on the S&P 500 exactly so far this year.
Yeah.
That's a rally.
Yeah, and that's why you know, some would say, you pull up something like RSI and you see some overbought indices or indications. Certainly you see that on the S&P 500. So yeah, relative strength index.
Okay, so let's see what Dana Dioria has to say about that. Dana's co-CIO over at Envestnet. She joins us from Pennsylvania. By the way, Envestnet, in the news cycle itself, just yesterday, Bain Capital and Reverence Capital Partners said they've agreed to take Envestnet private, accentuating the extent of investor interest in software firms exposed to wealth management. That offer values Envestnet at $3.5 billion on an equity basis and at $4.5 billion, including debt.
All right, we know you weren't probably at the signing of the deal, but we have to ask you, does it change your world at all, or what does this mean? Because we see some deals kind of happening, whether it's, acquisition, deals being taken private. We talked about it with the big banks today, that some, the bankers are doing stuff. How does it change your world, Dana, if at all?
It doesn't, right? So, I mean, certainly we're go forward with business as usual, carrying forward the vision that we've had. And I think that's why there's the interest in us to begin with. The platform, the Envestnet platform, has done a lot to put together a financial ecosystem for retail advisors and their clients. And that's going to be increasingly important as we move forward. And I think there's just interest in that, that value proposition that we've had out there and continue to have out there. We've done a lot of the work, to kind of put together these pieces of the system that we've both built as well as acquired. And, I think they saw the value prop there, frankly.
Yeah. All right. So good to kind of get your view on it. Having said that, really interested in your view on kind of where we are in the markets. Our most read story on the Bloomberg, we talked about some of the strategists that are out there that have bearish views and that are potentially kind of being pushed out maybe, or I shouldn't say that, but just it's very hard to be a bear in this environment, to be fair. And it harkens back to 1999, another environment where we saw irrational exuberance perhaps in the market, and then you saw it come undone. Is it, how do you think about it? Because markets don't just only go up. We know that.
Yeah, well, I think what you're seeing right now is some breadth in the market. So when you think about the idea that markets have gone up and the 18% rally, but I mean, of course, that's market cap weighted, right? And really, if you dive under the surface, if you're sitting in something market cap weighted or low tracking error to market cap weighted, it's been a great ride this year and last year. But if you're in a more of an equal weighted type of a framework or something tilted more towards lower price value stocks or small caps, it hasn't been as much fun. And, you haven't experienced a lot of that uptick. So I think, now this last, obviously the news around inflation was very good for markets in general, but small cap stocks in particular, finally catching a break because being more interest rate sensitive, and also not being richly valued in the way the large cap peers are, you're actually starting to see some breadth. So I'd say, is there room in the rally now for some other participation? That being said, of course, we're going into an election season, expect heightened volatility. Yeah, it doesn't surprise me at all that you're starting to hear chatter now for, well, hey, maybe some of this is going to catch up with us. It can't all go up. We're very richly valued on a market cap weighted basis.
So what do you mean catch up with us? Like what part of the valuation catches up with us? Is it that earnings don't match what investors expect? What is it?
Yeah, so I mean, I think, we were looking at the standard 60-40 model in something like the 97th percentile of valuation, right, where a lot of investors sit. I think when you're priced to perfection and you're also very top heavy and concentrated on those largest, growthiest companies in the market, we all know there's a reason technology and communications are leading the way this year, right? It's these magnificent 7 stocks. It's this story around AI and growth. And yes, that thesis could certainly prove out, and we continue to have earnings that support that level of valuation. But there is at some point a question of, do we have a dip in that story? Do we start to realize that AI is going to take a little bit more time than we hoped to be transformative? Is that, is there a pullback expectation of something like that when you have so much concentrated in one thesis and one small part of the market? I'll say small from the standpoint of number of companies. Certainly there's room for, concern there. And then, going back to why is there a little bit more exuberance in the market around other parts of the economy? Of course, the idea that we're finally going to get those rate cuts, and we've had a fairly hawkish stance from our Fed, right? The notion that perhaps we could even get a cut in September, at the very least, a signal of a cut by September, I think is starting to bring other parts of the market into the game.
Did yesterday's inflation report, did that change your view of timing of a cut?
Well, I think for a lot of people, it obviously brought the thought that it's going to come in September. Maybe the expectation was that the Fed would wait until after the election. Now I think a lot of people are expecting that it would happen in September. I would say from my standpoint, it made me think September is certainly much more possible. I do think also the Fed may just signal in September, or I don't think July is in play yet. And it may just signal it plans to.
Yeah, Mike Mackenzie told us that today earlier too.
Yeah.
Yeah.
Hey, Dana, what I really want to find out from you is I'm looking at the Russell. It's up about 1.3%. It was up 3.6% yesterday. It continues to see a fair amount of momentum, to say the least, this week. So as you say, this broadening out, got new money to put to work. Where do I put it?
Yeah, I am a proponent of, looking at those areas of the market have been ignored. I know valuation does not seem to matter, and you started with, it's hard to be a bear in this market. I'll say it's also hard to be a value investor. But nevertheless, I think, look, if you have money to put into the market, I'm taking the assumption you've already got a big chunk of money in the market. That's your standard investment. It probably looks market cap-esque. And that means you've got a lot of large cap growth tech already. So you may love the AI thesis. You're already very heavily betted on that thesis, whether you know it or not. I would put it more towards area of the markets that have been ignored, that are not, small caps in particular, right? Small value tend to outperform over time. These areas of the market are lower than average in their valuations.
All right, we're going to leave it on that note. Dana, thank you so much. Dana Dioria, Co-CIO over at Envestnet, joining us from Pennsylvania. The Russell is up more than 6%. Russell 2000 up 6% this week. If I look at the S&P 500, just shy of 1%.
It's a broadening out of the rally.
Yeah.
Yeah, that recalibration yesterday.
Does it continue, though? Does it continue?
I don't know.
I don't know.
If I knew the answer to that.
It makes earnings so important.
It does, especially for those small companies.
Yeah, exactly. But from the large cap, do they live up to those expectations?
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.